Well, it is time now for Futures in Focus. The Fed's two-day meeting begins today with an interest rate increase all but certain to be announced tomorrow. Joining us from the CME to discuss is Oliver Sloup of iiTrader. Oliver, what's everybody saying down there? I've read strategist notes about a dovish hike and a hawkish hike. What do either mean to CME traders?
You know, there's a lot of jawboning back and forth, trying to determine what the Fed is going to say tomorrow, and not only for tomorrow, but really going forward throughout the rest of the year. I think the dollar has been a main focus for a lot of these traders, as well as the notes. But looking at the dollar, we've been in consolidation for the better part of the last couple of weeks after a tremendous downturn over the past previous months. And I think we're starting to find a little bit of a bottoming phase. We have a lot of shorts in this market, and the sentiment is overwhelmingly bearish. So I think realistically, we're looking for a short covering rally in the U.S. dollar over the next 1 to 2 weeks. From there, we'll look at data and see where that points us going forward.
The problem is that the narrative is elsewhere to a large extent at the moment, right? In Europe and in Britain and, in other parts of the world as well. So will the dollar have much control over where it goes? Oliver, I was asking if the dollar will have much control over where it goes, given how much momentum there is for assets to move in Europe and in Britain at the moment.
Right, and when you're looking at the dollar and trading the dollar, you're also looking at other currencies, the euro being the big one. I think we're starting to top out in the euro, 112 to 113. We've seen levered shorts cover about 2/3 of their position over the past couple of weeks, and I think that leaves little room to the upside out above 113. And so when we're looking at the U.S. dollar rebounding, you're right. You're absolutely right. We're looking at the euro coming back a little bit. And again, I think this is more of a shorter-term setup, and we'll have to see where the data takes us in global economics from around the world from there.